Good morning from the financial desk. In a closely watched summit in Anchorage, Donald Trump faces a test of his diplomatic skills as he meets with Russia's Vladimir Putin. Trump aims to broker a ceasefire in Ukraine, a pledge he reiterated on the campaign trail. While he tempered expectations ahead of the meeting, citing a desire to set the table for future multilateral talks, the domestic and international stakes are high. Analysts suggest Trump is well aware of the political implications of either a breakthrough or a perceived failure at such a high-profile juncture. Turning to news from Asia, Beijing has signaled growing impatience toward Western companies stockpiling rare earths. These minerals, vital for the production of technologies including electric vehicles and military equipment, are tightly controlled by China. Sources told the Financial Times that officials have warned hoarders may face even tighter supply constraints. This comes amid broader concerns about China's economy, where both industrial output and retail sales have posted their weakest growth this year. Meanwhile, Warren Buffett's Berkshire Hathaway has resumed a sizable offloading of Apple shares. After a pause in sales that lasted nearly a year, the investment giant sold more than $4 billion worth of Apple stock in the second quarter. The move aligns with a broader trend at Berkshire of reducing exposure to public equities, with the firm boosting its cash position to over $170 billion. According to filings, Apple remains Buffett's largest single holding, but the trimming signals a more cautious positioning amid volatile tech valuations. In a related development in the tech world, Intel saw its stock rise over 7% after reports indicated the Trump administration is exploring an unprecedented option, taking a direct ownership stake in the chipmaker. This would mark a dramatic intervention aimed at revitalizing America's semiconductor capabilities in light of geopolitical tensions and competition with China. Speaking of U.S. tech, a new report highlights a surge in corporate security spending among top Silicon Valley firms. Companies like Meta and Alphabet have dramatically increased their executive protection budgets as prominent figures like Mark Zuckerberg and Sundar Pichai become more publicly visible in political landscapes and regulatory debates. Over in London's financial sector, there's a rare signal of optimism for Canary Wharf. The valuation of some major office assets, including buildings housing Citigroup and Morgan Stanley, modestly rose by 0.6% in Q2, following nearly 3 years of stagnant or declining values. The uptick suggests a nascent revival for the once struggling commercial hub. Elsewhere in UK finance, private equity owners of Evelyn Partners are considering a sale of the wealth management firm, with an expected price tag of around £2.5 billion. Potential suitors include NatWest and the Royal Bank of Canada. The deal underscores the ongoing consolidation wave sweeping through the wealth advisory industry as firms seek scale and stability. In political infrastructure news, UK parliamentarians are expressing concern over escalating costs at Westminster. A refurbishment effort estimated at more than £10 billion has drawn scrutiny, with some critics citing apparent extravagances, including what they call one of the most expensive front doors in the world. And finally, in Kenya, the future of conservation is being debated as the renowned Amboseli National Park returns to local governance. While the change empowers communities, conservationists worry it could disrupt established wildlife protections, a delicate balancing act between local development and ecological stewardship. Asian markets opened mixed today, with Hong Kong's Hang Seng down over 1%, while Japan's Nikkei gains nearly 1.3%. U.S. indices are mostly steady heading into the weekend. This financial news summary has been compiled from reporting by the Financial Times, Bloomberg, CNBC, The Wall Street Journal, and Reuters.